Today, Professor John Cooper from CSULA and Albert Cruz Ruiz from CSUN will be talking to you about how they're conducting tax services this year and the ins and outs of the tax filing process. We will have a brief Q&A after the presentation, so please send us your questions throughout the program. Take it away, Albert. Thank you.
All right. Hi, everyone. My name is Albert Cruz. I'm one of the operations supervisors with CSUN VITA. And with me today is John Cooper, who manages the Cal State LA VITA operations. And so today we're going to be presenting on the 2022 tax season, including the value that VITA provides in terms of free tax preparation services to low to mid-income communities. We will also go over how to know if you qualify for our services, what to bring to the appointment, and additionally, we will provide a preview of the operating framework of our various sites. So, okay, so next slide, please. All right, so regarding what is VITA, VITA is a tax preparation service that basically provides it to low-income communities as long as they're in scope, which includes usually people that, but not limited to people with incomes less than 58,000, people with disabilities, people with limited English-speaking abilities. I did want to note that since we started in 1970, currently today we do have about 8,000 sites and we help about 3.8 million people nationwide. At least with CSUN VITA, we did help in last tax season about 5,677 taxpayers. We provided about $6.7 million in refunds and 2.6 million in federal credits. So this has allowed us to develop a really good relationship with the IRS and the Franchise Tax Board, which with their help, we're able to expand our services and provide greater value to the community. We also wanted to let you guys know that all of our preparers are certified tax preparers. They get the advanced certification as well as a volunteer standard of conduct certification and an intake interview and quality review certification as well. And all tax returns go through a rigorous quality review process. And at the end, your federal and state returns are e-filed after you approve it. And so there are certain exemptions for the 58,000, but it depends on the site. And it would be advisable to contact your VITA site prior to coming to your appointment to make sure that you are within scope. Okay, next slide, please. Okay, so what are in-scope returns? So there's an extensive list. Here we're just going to be covering a few of the in-scope, the general in-scope returns. So if you have income below the 58,000 threshold, then you are in scope. If you're married, filing jointly, single, if you're a qualified widower, the one type of filing status that we do not have in scope is the married filing separately. However, if you are married, there are certain situations where you would be able to claim head of household and not have to file as married filing separate. We do have also, self-employment individuals are also in scope. There are situations where they are out of scope, including situations where they have expenses above 35,000, or if they have a net loss, which means that they had more expenses than they had income. We also include pensions, IRAs, annuity distributions, social securities, income, disability income, capital gains. However, we do not have in scope cryptocurrencies, given the way that some of them are a bit decentralized and don't communicate with the IRS. But that's generally, yeah, they are out of scope. We also provide tax preparation services for people that claim credits for other dependents, and the earned income tax credit, gambling income and losses, unemployment compensation. Next slide, please. We also are able to provide people with health savings accounts that have contributions or withdrawals. We can also provide services for those that have IRA contributions, deductions, credit for child independent care expenses, standard deductions, itemized deductions. Certain situations are out of scope, such as investment interest, non-cash charitable contributions, casualty or theft losses. We also provide services to foreign students and Yeah, this is basically a short list of in-scope situations. There are a variety of out-of-scope and in-scope, a more extensive list. So definitely contact your Vida site to be able to get a more in-depth understanding of whether you are in scope or out of scope. I'll be now handing it off to John Cooper.
Yeah, thanks, Albert. So next slide, please. So do you have to file? One thing that you really need to keep in mind with Vida is that it's free. So you may want to just come and get your, whatever you have, do a return just to see if you get some credits, because you may qualify for a credit that produces a refund for you, whether you have too much going on or not. So it's no charge. The only investment you would have in that is coming to the Vida site, bringing your documents, whatever you have, and getting the return prepared, and you might be pleasantly surprised. Now, you do have to file if you have your own business and you have income of $400 or more. You won't pay income taxes on that, but there's self-employment tax. The government always tries to get something from us, right? And then these are general guidelines for people that are under 65. If you're 65 or older, that's a little bit higher, these cutoffs. But single, if you have 12,550 of gross income, so that's wages, dividends, interest, whatever income you have. If it's 12,550 or more, then you will have to file. Head of household, meaning that you generally you live with a dependent child and you support that child. And then if your income is 18,800 or more, you file then. And if you're 65 or older, it's a little bit higher than that even. If you're married filing jointly or your spouse died in the last 2 years and you have a qualifying dependent, if your spouse died, then you can file as essentially as married filing joint. It's called qualifying widower, and the number goes up 25,100. So, and again, if you are older than 65, it is a little bit higher number. So this might mean that a lot of us won't have to file, but I still think you should file because you might be pleasantly surprised. There are lots of credits that are available now for us, and you could get a refund even though you didn't pay anything in. So if you're a dependent of another taxpayer, that typically is going to be a student or a person that lives in the house of someone who's working, I suppose. There's some lower levels for whether the dependent has to file or not. So if you have unearned income, so that means you didn't work for it, you earned it by investments, for example. So it's interest and dividends. And that was over $1,100, you have to file. Or your earned income, meaning that you produce the income by working, was over $12,550 if you're a dependent of another taxpayer. And in general, if your gross income was more than the larger of $1,100 or your earned income plus $350. So as you can see, this gets a little complicated. And again, I would like to just urge you to, regardless of whether you think you have to file or not, just go to the Vida site. We'll go through where these are and the next, some of the slides that are coming up, and see what happens. You're only out your time, and it might really turn out to be a nice day for you. Next slide, please. So besides the fact that you might end up with a credit, there are some other reasons to file too. So if you had withholding of any kind during the year, that means you maybe had a W-2 or you got a pension payment or Social Security, and you've elected to have income tax withheld on that amount. The only way you're going to get it back if you don't owe any tax is by filing a tax return. IRS will not contact you and say, oh, you have $600 of withholding, we want to give it to you. you have to file a tax return. Probably not a lot of you make estimated tax payments, but if you have your own business where, say you're even an Uber driver, it almost slipped away there for a moment, an Uber driver, and you make payments quarterly because you don't have withholding on your earned income, you need to file because you may have overpaid your tax, and that's the way you get it back. The earned income tax credit is huge in VITA. We have lots of people that qualify for this. And what this is, and it's on the next slide, so I won't go into it much, but it's a way to provide some help for people that are working but not making very much money. You actually can get a refund on this for money that you did not pay in. The child tax credit could produce a refund for you, and you don't have to pay anything in for that either. If you are a student, we probably don't have too many students in this group, but VITA does a lot of student returns. Then there are education credits, the American Opportunity Credit that can produce a refundable amount. Refundable meaning you get a refund even though you didn't pay anything in. If you may qualify for the premium tax credit, and that applies to people, and it's on the next slide, but it applies to people that have health insurance through the market that's here in California. And let's see, the recovery rebate credit went out early in this year, as I recall. I think it was this year, in 2021, I mean. I'm still thinking of the 2021 year because that's the returns we're doing. And there was $1,400 for the taxpayer and spouse and the dependents. And if you didn't get it, or all of it, this is how you get it, is by filing a tax return. You may be required to file a state return. All the requirements for filing that I've talked about are at the federal level, but California has its own set of rules. And so really, it's just safer to just file a tax return. And finally, this last one's really pretty important because this is becoming more and more common. You may want to file just to prevent tax identity theft. And so if someone gets, in some way, your tax ID number and files a return, the IRS will look to you. They'll assume you filed that return, and if the return was fraudulent, you're going to have some explaining to do. So it's a good thing to do to file just to prevent that. So next slide, please. So I said I would talk a little more about the Earned Income Tax Credit and the American Opportunity Credit. And here it is. It's kind of summarized here for you. But the idea on the Earned Income Tax Credit is that if you're single, you're working and you have a dependent maybe or not, and you're earning at a low income level, you can get this additional amount paid to you because of the amount of earnings that you have. It's called the Earned Income Credit because you have to have earned income to qualify for it. If you're married, both you and your spouse have to have earned income to qualify for this. So the rules in general are that you have to have earned income, like I just said. Single, that person has to have earned income, wages, for example. Married, you both have to have earned income, wages. At least age 19 without a qualifying child. Investment income has to be below $10,000. I think we're pretty safe with that one, right? With the interest rates we get today. You have to have a valid social security number and be a US citizen or resident all year. So the rules change a little as you maybe are married and you have 2 children. It gets easier to get this. So this is why a lot of taxpayers come to VITA, because we make sure that you get the amount that you're due. And the Earned Income Tax Credit is probably the most significant credit that we are able to get for the people that come to us. So I know I'm encouraging you to come, but think about it. It will be worthwhile. The American Opportunity Credit is a credit for education. I believe it's up to $2,500 credit per year, as I recall. And it's for the first 4 years of higher education. And after that, you have to go to a different credit that's a little less in the dollar amount. But it's, it's again worth filing for this if you're a student. You have to be at least a half-time student, and you have to be enrolled in a qualifying institution, which is almost anything. You can be in a truck driving school or a beautician, whatever it is. A lot of these things qualify. So don't just think, I'm not going to Cal State LA, so I can't get this. You might be surprised. So check with your Vida site about that. So I'm going to pass it back to Albert here to talk about special situations that might come up. So Albert?
All right, I'll take over. So can I get the next slide, please? All right, so special situations for 2020 and 2021, particularly regarding the stimulus check. A lot of questions that I get regarding this are, is it taxable? And it's not taxable. It doesn't increase your liability, but it will pay for your liability if you did not receive it and you're claiming it on your tax return. And so if you received more than you were supposed to, you would then oftentimes they'll contact you. So if you received, for example, your stimulus check, but you either didn't get it mailed to you, but they sent it out and then you claim it on your tax return, or if you were previously a dependent of somebody and your parents received, or the person claiming you received it, and then you claim it on your tax return, then they might contact you. It really depends on the circumstances of for regarding the situation, and but generally it would be advisable to, for example, if you got a check, to just write void it on it and to send it back with a explanation to the IRS regarding what happened. So definitely I would say contact them and see what would be advisable. They would generally contact you if they see any discrepancy on their side. So the stimulus check is also known as the recovery rebate credit. And so for 2020, unemployment benefits were part of it. 10,200 were exempt. For this year, it's not going to have that same exemption. Another benefit that the IRS provided the general population is the ability to claim charitable contributions on your tax return. In the past, it had to be only with itemized deductions, but this year, even if you claim the standard deduction, you will still be able to claim it on your tax return. And if you basically will know if you need to itemize if your deductions exceed the 12,400 for 2020, 12,550 for 2021 if you're single, and 24,800 and 25,100, 24,800 in 2020 and 25,100 in 2021. And the amount that you can get is up to $300 if you're single and $600 if you're married filing jointly. Okay, next slide, please. Okay, I'll hand it off to John Cooper for this part.
Yeah, so I'm at Cal State LA, so that's why I'm on this one. I'm just really excited to say that we're doing on-campus tax preparation this year. It seems like it's been forever. It's been a couple years, but it's really exciting. I should have made that part bigger on the slide, I think, over on the left there, but we start this Saturday. And at Cal State LA, we're open every Saturday from 9 to 1. It does require an appointment, though. So you need to go to our website, and we'll have that on the screen in a few minutes. But I'm excited, and we hope to see you all come out. We've got quite a few volunteers that have all been trained and certified. And you make the appointment, you bring your tax documents in at the appointment time, and you wait. And we'll prepare the return. We quality review it. So we make sure that everything agrees to the documents you brought in. And then we go over it with you, and you can make sure that it looks right to you. And I know you're not a tax person, but if you're looking at it and your wages aren't on there, I think you would know that. So we'll explain what you're looking at, and then you can say, yes, that looks good, and you'll allow us to e-file it for you. We're also doing virtual tax preparation, kind of a hybrid approach, I suppose, because there are a couple of intake sites where we've partnered with nonprofit organizations. I'll have that up later. And you would go there to do the interview. So looking at step 1 of the red boxes, you would go there to do the interview, and they would scan your documents to us using a secure document transfer software. And then it would come to the managers that we have at Cal State LA, and they would assign it to one of the certified volunteers, the VITA volunteers, and then the return would be prepared, and then the manager would quality review the return. So every return we do has at least 2 different people on it, one that prepares and another that quality reviews. And a lot of them, to tell you the truth, have 3. There's a lot of times another quality review. And then once we've quality reviewed the return, then we notify the intake site. Like one of ours is Young and Healthy. So if you went there, we would let them know your return is ready, and they would contact you and say you can come back, and then they'll go through the return with you. And assuming it looks good to you, they'll e-file it. We can do the direct deposit into your bank account as well, and it would be at that time that you would add that information. So 2 ways to do it. I'm just really excited about being on campus. I've had students for a couple of years almost that I've never met in person. So they're certified volunteers this season. I'm looking forward to meeting them. I'm looking forward to seeing all of you as well. So next slide, please.
All right, I'll be taking over for this slide. This is our VITA process for CSUN. Well, it generally depends on which site you go. Each site has different rules depending on the COVID rules for that local area. And so I'll just be going over generally the CSUN VITA operations at the campus. So we do offer virtual as well as in-person preparation. The way it works is that when you create an appointment, if it's virtual, you will receive a link to the VITA Zoom link. And if as well as the form 14446, which provides us consent to provide you the service virtually. You will also need to you will also need to fill out that same form, the 14446, if you come to campus, because the preparers are going to be the preparers that go through your return. They're going to be in a separate room, so it's in a way the same as virtual. You're not going to be in the actual preparation site, and so you will need to fill out the same consent form, as well as the 13614C, which is the intake form. It'll just ask you basic questions, and as well as the tax returns that you're bringing with you, and it'll as we go through the intake preparation process with you, we will ask you further questions, clarify any questions or concerns that you have. From that point, we will give it to the tax preparer, who will then go through the return. Upon finishing the return, similar to as John said, we will also go through a quality review process where the supervisor will then review the return. And finally, the lead supervisor will do a final review to check some of the critical information on the return, such as your social, your address, your routing and account number, to ensure that the proper information is there to ensure that you receive it. After the final review, you will then consent for us to e-file, and at that point, we will give you a copy. And if you're doing your preparations virtually, we will set up a customer portal where you will be able to not only receive your tax return, but if you have any documents that you want to provide us, you could then upload it to the customer portal, and we will be able to access it there. Upon completing your return, we will provide you your tax return through your customer portal, and you'll have access to it until November 15th. Beyond that date, you will need to contact us. If you want your returns from prior year, if you're in person, we'll print it out for you. If you want to get it while you're doing your preparation virtually, we will go through a different process to securely send you your tax return. Okay, next slide.
All
Okay,
right.
John, over to
Yeah,
you.
back to me again. So we didn't put it on the list, but this is what you need to bring with you to your appointment. And what's not on the list is it's really helpful if you can bring a copy of your prior year tax returns, your federal and California. Very helpful. A lot of people can't locate them, so we left it off the list, but I can tell you that's the best way to make sure that we've covered everything, because most people have similar income and deductions to the prior year. So if you can, bring that. But other things to bring, you have to bring a photo ID for you, and if you're married, your spouse. And then the next two are a choice, depending on what you have. We have to get copies of your social security cards for you and your spouse and any dependents. And if you don't have social security card, then you would need to bring your taxpayer identification number, or the assignment letter. That's a substitute for that. And that also applies to you, your spouse, and dependents. Proof of foreign status and identity if you're going to apply for an I-10. So let us know in advance if that's what you're going to do, and we'll make sure that you get that taken care of. We have to have birth dates for everyone. It used to be, I think it's been a while, probably 10 years ago, you could guess at a birth date if you didn't remember, and it didn't matter. But now the tax return will not e-file if the birth date is incorrect. So make sure you have them correct when you come in. And if it ever gets accepted with the incorrect one, you're stuck with it. You have to go to the IRS and try to undo the damage there. Wages and earnings statements, there's W-2, the W-2G, which would be for other types of income, 1099-R, 1099 miscellaneous if you have some income from your own business. Whatever else you have, you recognize them when they come in, and you should have been receiving those in the last 2 to 3 weeks. We just received some tax documents 2 days ago, so they're still coming out. So you're definitely not too late on this. Interest and dividend statements, bring those along because they're generally taxable. And on the health insurance, it's Form 1095. And for the state, Form 3895 for marketplace insurance. But bring that because we have to include that information in the tax return. And again, just circling back on this, if you can bring a copy of your prior year tax return, that will speed this process up for you. So try to do that. And then I think we're going back to Albert for the next slide. So next slide, please.
All right, so these are our Vida sites. We are providing you guys a link if you guys would like to set up an appointment, depending on your area, whichever one works best for you. But that's basically it for this slide. I'll be handing it off to John again for the sites that he has.
Yeah, thank you. So I know I went on and on about we're on campus. This is where I'm hoping to see you. Come to the campus every Saturday, starting this Saturday from 9 to 1. You need to make an appointment. Here's the website is, I'm thinking I'm pointing at it, but I can't. The website is under the Cal State Los Angeles campus information there. Thank you. So go there to make an appointment. I think we're booked for this Saturday, so you might have to come the next week. But remember, when you go there, it's all done in one visit. So you go, you bring your stuff, we interview you, prepare the tax return, review it, come back and review it with you, and then e-file it. So you're done if you can do it that way. It's really, really great. If that's not convenient for you, we have 2 intake sites that will do the interviews and the intake, which means they look at your tax stuff and fill out some forms just regarding what types of income and expenses you have. And that's Young and Healthy, and they're in on Peoria Street in Pasadena. The address is up there. And you do need to make an appointment there, and you can do it by calling or by using the web site that's listed under Young and Healthy. And Barrio Action, same thing there. You need an appointment, and they give you the website there. Both of these, so let me put it this way. Young and Healthy is Saturdays from 9 to 1. Barrio Action, I believe they're going to do more than just Saturdays. I believe they're doing weekdays as well. So call and see what appointments they have if you want to go there. But if you want to get one-stop tax preparation service, come to campus. So I think that's it. And then next slide, please. It's my favorite one. We got to the end here. And I'm sure talking about taxes is not your favorite thing. But it has to be done, right? And I think many of you will be very happy because you will get refunds, credits, things like that will produce cash in your pocket. So Albert and I are available to answer any questions you might have. So let us know.
Yes. Okay. Thank you, guys. Great presentation. So yeah, we do have a few questions. The first one I have is, my husband and I had unusually high, yes, it's displayed there, medical expenses during 2021. A friend told me we should file separately and claim all the medical expenses on one of the returns. Is this right?
Well, a lot of people do this, but it's not right. We live in a community property state, and that means that if you're married, which this question comes from a married couple, all the income and all the deductions are split 50-50 on each of the separately filed tax returns. There's really no benefit to doing married filing separate, with one small exception. If you have, and this is pretty technical, we can't help you at Vida, but if you have separate property funds, maybe your family gifted money to you and you've kept it separate during your entire marriage, that's your separate property. And if you paid medical expenses out of that, you can claim 100% of those medical expenses. But for the most part, it's 50-50. And if you do it any other way, you might get by with it. But if you get audited, you will not be happy.
Mm-hmm.
Thank you. That's good to know. Okay, next question I have. I did some construction cleanup work during the year and was paid in cash. I never received a Form 1099 for it. So is that taxable?
Yes, any type of income, even if it's cash, it does need to be reported. The benefit is that if you receive this income for self-employment, as it's stated, you will be able to claim expenses against it. And so there's definitely benefits to that. But generally, we would request that if your employer, if you have their contact information, try to get that 1099. If in the event that you're not able to, then we can definitely report your income as just cash.
I guess I would want to add to that, because I just had this question come up. Even if it's less than $600, it's still taxable. $600 is the point where the payor, the person paying the money to you, has to file a 1099. So if they give you $400 for doing work, you still have to report that $400 of cash income, and you won't get a 1099 on it.
I didn't know about the 600. Thank you. Good to know. Okay, I have another question. So, how much do I need in itemized deductions to bother with keeping receipts, like things like DMV fees, charitable deductions, things like that?
Right. The 2017 Tax Act really doubled the standard deduction. Up until that point, a lot of us had to keep receipts and report DMV fees, all those things. But the standard deduction is just given to you, and you're allowed to either take that or your itemized deductions, whichever is higher. And since the standard deduction was doubled in the 2017 Tax Act, most of us don't have to keep this stuff anymore, with one exception I'll come back to in a second. So for married filing joint, for instance, the standard deduction is $25,100. So that means to itemize, you would have to find receipts for more than $25,100 to make this worthwhile. And that's quite a lot. You have to own a house and be paying mortgage interest, property taxes, things like that. The one exception is, and we mentioned it in the slides, is even if you take the standard deduction, you should keep receipts for cash charitable contributions, because you can deduct even if you don't itemize. You take the standard deduction, you can claim $300 for single and $600 of a deduction for a cash charitable contribution. You don't have to have the receipt, but boy, we'd sure like you to bring it in if you have it. What we're doing on that is, if you don't have the receipt, we have you fill out on a piece of paper that you donated $300 to, I don't know, Goodwill of cash, and sign it, and then we keep that, so we have some support for it. So the numbers are pretty high now, so it's pretty unlikely you'll have to keep all those receipts except charitable contributions.
I still keep them. I know my husband's like, why do you? It's we filed married joint, but he's like, why do we need to? I'm like, no, I have to. It's from what I've always done.
Habits are very hard to break, right?
Yeah. Okay, I have another question. My wife's brother lives with us. He's 16 and unemployed. Do we get any tax benefit for this?
Before I answer that question, I did want to make an additional comment about itemized deductions. One thing that it should be noted is also that for state and property taxes are limited to $10,000. So that's one noteworthy thing, as well as if you have healthcare expenses, there's a 7.5% floor based on your AGI, so your adjusted gross income. We can go into more details on that if there's any additional questions on that. But regarding this question about the 16-year-old that's unemployed, as long as he does live with you all year, the income limit for if they were employed is $4,300 in 2021. So if they make anything above that as a dependent, as an other dependent, given that they wouldn't fall under the same rules as a qualifying child. So then if they didn't have any income, they lived all year together, then they can get a tax credit for claiming that dependent.
Okay. Thank you. We have
Caroline, there's a couple of questions.
Yeah, I know. I was just gonna. Yeah, and there's two more just came in. So
Yeah.
okay. So Giselle wants to know if you got married during the year. Do you have to file as married jointly?
It's tested on the last day of the year. So if you're married on December 31, you can file as married filing joint or as married filing separately. It's not likely that you would get any benefit from doing married filing separate. So you would file as married filing jointly. If you get divorced on December 30, you're single for the year, unless there's a dependent, and you may qualify for head of household. So it's all measured on the last day of the year.
I also wanted to add an additional comment to it. If you are married and for whatever reason your husband or your wife isn't in the picture for a minimum of 6 months and you don't see them, live with them, then if you have a dependent, you can then claim head of household at that point. So that's one of the situations where you wouldn't need to file as married filing jointly. But yeah, that was it.
Okay. Thank you so much. We have another one came from Ebenezer, YouTube. Yes, husband and wife are joint tenants of a principal residence house. Wife passed in December 2020. Husband sold house in March 2021. How do you figure out the step-by-step cost basis of the house?
So you want me to do this? There's no step up in the cost. Well, there is actually. Oh, she passed, yes. So it's on the date of her death, or there's an alternative date 6 months later, but in this case, you would use the date of death, and that would step the basis or the tax basis, which is the cost to us of the home up to its fair market value in December of 2020. Then the house is sold on March 2021. It's possible there's a little more increase in value, but very unlikely, and there's an exclusion for that gain. The thing to keep in mind on that value, because you may be asking about the practical question, how do you get it? You can have a real estate agent that sold your house give you what the value was on December 2020, do it in a letter on the letterhead of the real estate agent, and that should suffice on this. That will cover you. So you probably don't have any tax to pay, but if you've owned that house a long time, there would be a large gain probably from the date you purchased it to when you sold it, but no tax.
Okay, thank you. Good to know. I have another question. I am single and only worked part of the year, and I made just under $10,000 based on my W-2. Do I need to file a tax return?
So this, you're allowing me to say, come to Vida again in this one. I love it. So you don't have to file. The filing requirement for single is $12,550 if you're under 65. But you want to come to Vida because in this case, you would get an earned income credit. I can't say how large it is because it's a complicated formula, but there would be a credit. So you want to file even though you don't have to. Plus, you probably have some income tax withholding, and you won't be paying any income tax, so you would get a refund for that amount too.
Okay, thank you. Thank you. I have just a few more questions. Okay, so my wife and I receive Social Security income. Do we need to file a tax return?
You don't need to, but in the event that your incomes go above the $25,000, about $25,000 to 35, it can be taxable up to 50% depending on the other sources of income, and up to 80% if you make more than $35,000. And so generally it's not taxable. So there are situations where it will become taxable.
Okay, good to know. Also, I received unemployment income for most of the year. Is that taxable? If that
Well, yeah,
happens?
we did mention this in the slides, but it's kind of important. It doesn't seem fair or right that it's taxable, but it is. For 2020, we did get an amount of unemployment excluded from being taxable, but that happened after the year was over. And I keep waiting to see if we're going to get that again, but I haven't heard anything yet. So as of today, as far as I know, it's fully taxable. It has to be reported on your income tax return.
Okay. How about, I don't think, if you didn't get your full stimulus check in 2021, is there anything you can do? What can you do?
If you didn't receive your full stimulus check, you could claim it on your tax return. We'll ask a question regarding that, like how much you received, and based on the number of dependents that you have, you will receive the difference from what you were entitled to and what you received.
Okay, thank you. How about if I worked remotely from home? Because, lots of people have been doing that now. Can I deduct home expenses? Does that count?
Well, for most of you, the answer is no. If you're an employee, you can't because that deduction was eliminated. But if you have your own business, you will be able to deduct it if you meet certain requirements. So it's a little complicated, but again, if you check with your Vida site, they can help you with this. And I think we have another chat question here.
Sorry about that. I was muted. Okay, so yes, Ebenezer has another question. In that same scenario, so husband can still get $500,000 capital gain exclusion. Can he still file a married joint return?
I'm going out on a limb here. I believe there was a change several years ago that allowed 1 or 2 years after the death of a spouse for the 500,000 to still be the amount of the exclusion. Otherwise, it's 250. But Ebenezer, you won't have this kind of gain. You know, she passed in 2020 in December, and so you're going to get a step up there. So you won't have any gain. But I believe there is a period of time after the death of one of the spouses where you get the full 500,000 capital gain exclusion, 250 for single.
The last question I had was, so if you worked remotely from another state, does that count? Like, can you deduct that?
Yeah, well, you can't deduct it. The issue here is income. Where is it taxable? So this is a state tax issue. California is very careful and very diligent in tracking everyone down that works in the state. So if you're to make it the opposite of what we are, if you're an Arizona resident and during COVID you came over here and worked from California, California will want to tax you if you meet certain requirements regarding how long you were here. There is a credit, so you wouldn't have to pay tax in Arizona and in California. You would get a credit equal to the lower of the two taxes. But it means you have to file what's called a multi-state tax return. You would have your federal return, and then a California return, and then a Arizona return in that example. So this can get pretty complicated. So you're going to want to talk to probably not a Vida site on this, because we don't do multi-state returns.
I think we have one more question that just came in from Ebenezer. Is the step-up basis only half of the house market value on the date of death?
No, it should be the whole 100% of its community property. So 100% step up.
Okay. I think, okay, we just answered that one. Yeah. I think we have all of our questions. I'm trying to look to see if we have another one, but okay, thank you both for a great presentation. Please join us again. We're going to have a few more streaming programs next week. It's America Saves Week, February 21st to the 25th. The three streaming programs on savings, credit reports and scores, and how to open a bank account. More information, lapl.org/what's on/calendar, and all of our programs are on there. So thank you guys again both very much, and have a great rest of your day, everyone. Thank you.
Bye,
Thanks a lot.
everybody.
Bye.